All right, so today we're doing a deep dive into Indraprastha Gas Ltd, or IGL for short. It's a pretty big player in the Indian utility sector.
Yeah, looks like we've got a whole bunch of reports and analysis on them.
We do. The goal is to figure out, is this stock a buy or what?
The worthy mission.
It really is, especially since it's kind of being described as like a strong performer but still under the radar.
Interesting.
Yeah. Plus, we see these labels, high financial strength and affordable valuation.
Those definitely catch the eye.
They do, right? I'm intrigued. What about you?
Definitely. But, labels are just labels. We've really got to look beyond that at the numbers themselves and see, what's the story they're actually telling?
Exactly. So let's jump right into those financials then.
Sounds good.
First up, revenue. We're seeing a bit of a downward trend lately, although long-term growth looks, decent.
Yeah, the total revenue, actually, it's falling faster than its historical average, so that's something to note.
Okay, so maybe a little bit of a red flag there, potentially.
Could be. It could be a bunch of different things causing that. Maybe broader economic headwinds, or maybe there's increased competition in the sector.
Right. Makes sense.
But the real question is it a temporary blip, or is this a sign of something more serious?
Okay. Well, we'll definitely keep digging into that. But how about net profit? Because that seems to be growing faster than historical averages.
True.
That's got to be a good sign.
Yeah, for sure.
Yeah.
Growing net profit usually means a company's doing a good job managing costs and basically squeezing more profit out of their operations. And what's kind of interesting here is that even with that dip in revenue, net profit is still climbing.
All right. So maybe they're doing more with less then.
Potentially, yeah. It could be tied to IGL's focus on city gas distribution, especially in places like Uttar Pradesh.
Okay. Yeah.
Maybe they're, tapping into some new markets, or maybe they're just seeing a surge in demand where they already operate.
Right. All right. Well, things get a little bit more interesting, though, when we look at cash flow. Because operating cash flow is going down, but net cash flow is actually going up. What's happening there?
Yeah, that's where IGL's strategic moves come into play. If you look at their balance sheet, there's a massive jump in working capital.
Okay, so that's probably a big part of it.
Definitely. We're talking like a 800 to 1.6% year-on-year increase. So that suggests they're investing heavily.
Wow.
Yeah, a lot. It could be infrastructure expansion or even acquisitions.
So maybe those investments eating into their operating cash flow right now.
Yeah, right now. But, these things could pay off big time down the road. So it's kind of a long game.
It makes sense. But here's something I'm a little puzzled by. If their profit is growing, shouldn't we be seeing a rise in return on equity or ROE and return on capital employed, ROCE? But the data is showing that both are actually shrinking. What explains that?
That's a good catch. It just shows that financial ratios, you got to interpret them carefully. Yeah, growing net profit, that's positive. But shrinking ROE and ROC could mean that IGL is facing some headwinds when it comes to generating returns on their investments.
Interesting.
It could be, lots of things. Increased competition maybe, squeezing their margins, or maybe it just takes time for these large-scale investments to actually start generating returns.
Right. So the financials are kind of a mixed bag so far, some positive, some maybe not so much.
Yeah.
But let's not forget, IGL is also being touted as having this affordable valuation.
Right.
But the data is showing that their PE ratio is falling faster than historical averages. The price to sales ratio is shrinking, and even dividend payouts are dropping. So help me understand this. How can they be affordable when all these indicators seem to be heading in the wrong direction?
Well, the key is understanding that valuation is relative. It depends on a whole bunch of different factors. Yeah, those ratios are declining. We see that. But we got to look at the bigger picture, right? So, for example, the strong buy zone that's been identified for IGL's PE ratio that hints that there's potential for the price to rebound.
Okay.
And then when you compare the Graham number, which kind of gives you an idea of the stock's intrinsic value to the current price, it suggests that IGL might actually be undervalued.
So maybe those shrinking ratios aren't the whole story.
Exactly. There's more to it.
All right. Well, let's shift gears for a second and look at their momentum score, which is currently neutral, not bad, not great. So which way is the stock likely to head in the short term based on that?
Well, it's tough to say for sure, Predicting short-term price movements can feel a bit like reading tea leaves sometimes.
Yeah.
But technical indicators, they can give us some clues. So one thing is, IGL is currently trading above more exponential moving averages than simple moving averages. And that could potentially signal some underlying bullishness.
Interesting.
But then you look at the oscillators. And they're kind of painting a mixed picture. Some are in bullish territory and some are in bearish.
So maybe the market's a little undecided on IGL at the moment.
Could be, yeah. It's possible.
Is there anything else in the technical indicators that we should be paying attention to?
Yeah, the DADX is actually pretty high.
Okay, so what does that tell us?
Well, it means there's a lot of volatility in the stock. So the price could swing significantly in either direction. To get a better handle on this, we can look at IGL's beta value,
Right.
which basically measures how closely its price moves with the overall market. And with a 3-month beta of 1.03, IGL's price tends to shadow the market pretty closely.
So that neutral momentum score,
Yeah,
we got to keep in mind what the broader market's doing as well.
exactly. You can't just look at it in isolation.
All right. Well, before we wrap up this part of the deep dive, let's see how IGL measures up against its competitors using the peer comparison table. Anything jump out at you there?
Well, one thing that's pretty striking is how well IGL scores on valuation compared to most of its peers.
Right.
But there is one big exception, Adani Total Gas. Their PE ratio is super high, over 114.
Wow, that's a huge difference. Why such a massive gap?
That's a good question. It could be that the market has just super high growth expectations for Adani Total Gas, driving up its valuation, even if their fundamentals are similar to IGL's. Or it could be a simpler explanation, maybe market hype or just speculation leading to an inflated valuation. But it does underscore how important it is to look beyond just those valuation metrics and really dig deeper into a company's specific circumstances.
Yeah, for sure. Now, another thing that caught my eye is IGL has the lowest momentum score amongst its peers. Is it lagging behind, or could this be an opportunity for, savvy investors?
It's hard to say for sure. It's possible that IGL is underperforming compared to its rivals, but then there's also the chance that, the market hasn't fully grasped its potential yet. And that could create an opening for those who believe in IGL's long-term prospects. Again, we need to do more research to really know for sure.
Right. So we've uncovered quite a bit about IGL already. A mix of positive and maybe some concerning signs about their financials. Some hints of a potential bargain with their valuation. And we need to keep an eye on both their technical indicators and those broader market trends. But before we move on to the next part of our deep dive, what are your key takeaways from all this so far?
I think it's pretty clear that IGL operates in a dynamic industry, one that's constantly evolving. And, while their financials are generally pretty healthy, there are some areas that need more investigation,
Definitely.
like the recent dip in revenue and then the shrinking ROE and ROCE. Those raise some questions about their ability to maintain profitability and generate returns over the long term.
Right, so definitely some things to keep in mind as we continue our deep dive. What are we going to explore next?
Next, we'll dive into IGL's historical price chart and see how they've performed over different time frames. That'll help us understand the stock's volatility and, identify potential support and resistance levels.
Okay, sounds good. I'm excited to see what insights we can get from that. So stay tuned, listeners, as we continue our deep dive into Indraprastha Gas Ltd. in the next part.
Okay, so let's switch gears a bit and take a look at IGL's historical price chart.
Yeah, it's been a bit of a ride over the past year, hasn't it?
It has. Definitely a roller coaster.
We saw a 52-week high of 570.4 and a low of 306.1. So that's a pretty big swing. Shows some serious volatility there. And when you look at returns, it's down 5.9% over the past year, and pretty disappointing, like a negative 4.7% over the past 5 years.
Yeah, those returns aren't exactly going to get long-term investors super excited.
Right.
But past performance, it doesn't guarantee future results, right?
Of course.
But by analyzing these chart patterns, we can try to identify some potential support and resistance levels, which can be pretty helpful for timing entry and exit points.
Okay, so where do those support and resistance levels lie for IGL?
Well, it looks like the stock has found support around that 306 level a couple of times over the past year.
Okay.
So that suggests that buyers tend to step in around that price, try to prevent it from going down even further.
So 306, is that a good entry point potentially for investors looking to buy on dips?
Possibly, yeah. It's definitely a level to keep an eye on, but, technical analysis, it should always be used along with fundamental analysis.
Right.
You really need to understand the company's business and financials, before making any decisions.
Okay, that makes sense. So let's dig a little deeper into those financials then, using these detailed reports we have. We talked about revenue and profit already, but what about their quarterly results? What can we see there?
Well, if you look at their most recent quarter, so Ending September 2024, IGL's operating revenues were actually up 6.9% year on year.
Okay, that's good.
Yeah, so that's positive. However, their net profit for the quarter, it actually declined by 17.7% year on year.
So another mixed bag. What's causing that profit decline even though revenue's growing?
Well, could be a few things, right? It's possible that increased expenses are putting pressure on their margins, maybe due to their expansion plans or maybe rising input costs. But to really figure that out, we need to analyze their profit and loss statement more closely.
Okay, so let's do that then. What are some key takeaways from their P&L?
Looking at their annual figures for the year ending March 2024, we see their total revenue was 14,260.97 crore, down slightly by 0.6% year on year. But their net profit for the year was 1,985.07 crore, and that's a significant increase, 21.1% year on year.
Wow, okay, so they managed to boost profitability even though revenue dipped a little?
Yeah.
What contributed to that profit growth?
Looks like their ability to manage costs is a big factor. Their EBIT margin for the year was 15.8%, up 18.9% year on year. So that suggests they're getting better at running their operations efficiently.
All right, well, let's shift our attention to their balance sheet now. Anything interesting stand out there?
Well, that huge jump in working capital we talked about earlier,
Yeah.
definitely worth another look. It's sitting at 283.4 crore right now, which is a massive increase from the previous year. And it's mostly driven by an increase in other current assets. So that could be a bunch of things. Maybe they're holding on to a lot of inventory or, maybe receivables. We'd need to dig deeper to know for sure.
Okay, something to keep an eye on then. What about their debt levels? Are they manageable?
It seems like IGL's in a good spot when it comes to debt.
Yeah.
Their long-term debt-to-equity ratio is pretty low compared to the industry average.
Okay, so that's good news. Now, let's look at the cash flow statement. We know their operating cash flow is going down, but what's the breakdown there?
Well, for the year ending March 2024, their cash from operating activity was 1,531.8 crore. It's a pretty big drop, 31.3% year on year. And that's probably connected to that working capital increase we talked about.
So those investments they're making, they're impacting their cash flow at the moment.
Yeah, at least in the short term.
What about cash from investing activities?
That's down too, coming in at euro 1,102.8 crore for the year. Another drop, 31.1%. So it looks like they're continuing to invest quite a bit in their business, maybe new infrastructure or acquisitions.
And lastly, cash from financing activities.
That's actually the one area of their cash flow statement that's looking up. It's up 76.8% year on year, reaching 315.5 crore. This could be because they're borrowing more or maybe issuing new shares to fund those investments.
So a combination of debt and equity to fuel their growth.
Yeah.
All right, let's move on to ratios. We talked about a few already, like the PE ratio and ROE. Are there any other ratios that can give us some more insights into IGL's financial health?
For sure. The interest coverage ratio is a big one. That basically measures how easily a company can cover its interest payments. And IGL's is really high currently at 286.2. So they're definitely not having any trouble servicing their debt.
That's good to know. Any other ratios worth mentioning?
Yeah, the current ratio is another important one. It measures a company's ability to pay off its short-term liabilities. And IGL's current ratio is 1.1, which is a little bit above the industry average.
Okay.
So that suggests they've got a decent buffer to meet those short-term obligations.
So overall, it sounds like their ratios are painting a pretty healthy picture of IGL's financial stability. But we can't forget about the final piece of the puzzle, the shareholding pattern. Who are the major players holding IGL stock?
IGL's got a pretty unique ownership structure. The majority shareholder is actually a combo of two promoters, JL India Ltd. And Bharat Petroleum Corporation Ltd. They each hold a 22.5% stake. So IGL is basically a joint venture between these two big public sector companies.
Interesting. What about the other shareholders?
Well, institutional investors, they hold a big chunk of IGL shares. As of the September 2024 quarter, domestic institutional investors, or DIIs, they hold 28.2%. And foreign institutional investors, FIIs, they hold 19.3%.
Okay, so big institutions are showing some confidence in IGL.
Yeah.
What about retail investors? What's their stake like?
Public holding is pretty small, actually, just 7.5%. So that suggests that IGL might not be on the radar of many individual investors, which, could be good or bad.
Yeah, true. Could be an overlooked opportunity, or it could be a sign that the market's undervaluing the company for a reason. But, with all this in mind, the financials, the price chart, the peer comparison, the shareholding, the big question is IGL a buy? What do you think?
It's a tough one. On the one hand, we've got a company with a solid track record. They're in a good position in a growing market, and there are some positive signs in their financials.
Right. And we can't forget about that affordable valuation label and, the hint that it might actually be a bargain. But on the other hand, there are some concerns, like the recent dip in revenue
Yep.
and the shrinking ROE and ROCE, and the fact that there's more competition in this sector now.
Yeah, exactly. And we can't ignore that the stock's been quite volatile and those recent returns haven't been great.
So what do you recommend our listeners do? Should they buy IGL, hold off, or what?
It really depends. It's impossible to say for sure without knowing, like, your individual risk tolerance and investment goals
Mhm.
and how much more research you're willing to do. This deep dive, it's really just a starting point.
Yeah, I think that's a really important point. We've given you a pretty comprehensive overview of IGL, their financials, those historical price trends, their position in the industry, even their ownership structure.
Mm,
But ultimately, the decision of whether to invest, it's got to be yours.
exactly. And there are arguments to be made on both sides. If you're okay with a little risk and you believe in IGL's long-term potential, then that 306 support level we talked about, that might be a pretty attractive entry point. But if you're more risk averse or you have some doubts about, their ability to deal with the challenges ahead, it might be better to just wait and see, wait for some more positive signals before you jump in.
Makes sense. And remember, even if you do decide IGL fits your investment strategy, this deep dive, it's just the beginning of your research. It's really important to dig deeper, look at different viewpoints, maybe even talk to a financial advisor before you make any final decisions.
Definitely. Investing is a marathon, not a sprint, right? Take your time, weigh the pros and cons, and just make informed choices that work for you and your financial goals.
Well said. This has been a really fascinating deep dive into IGL. We've learned a lot of great information, and I hope this has given you, our listener, a much better understanding of this company and its potential.
And if you want to learn more about IGL, or maybe there's another company you're curious about, and you want us to do a deep dive on them, just let us know. We're always excited to explore the world of finance and help you navigate investing.
Thanks for joining us, and happy investing.